what you have versus what you owe on it.
And then what you're worth.
What you're worth. Okay, assets. Anything of value that we own. Liabilities, folks that we owe money to for our assets. Owner's equity, kind of our net worth. So what at the end of all that, what I own minus who I owe for that is what I'm worth. Owner's equity. Okay? Yesterday we had a bunch of garbage on the board over here, and we were doing some transactions. Transactions are things that change the accounting equation. So if I buy supplies for cash, supplies is going up, cash is going down. Both assets. Okay? If I get some money from the owner's equity goes up, my cash goes up. If I am going to buy supplies on account, supplies goes up, but then my liability, whatever company it is, goes up as well. Okay? So if you think about this accounting equation, are we smart enough that I can abbreviate like that?
Mm-hmm.
Okay. If I'm doing the accounting equation and I have all my assets listed, for those of you who have got that, okay, if I'm doing something over here like receive cash from owner as an investment, if I'm going up on this side of the equal sign, I got to go up somewhere over there as well because it always has to be in balance, right? We talked about that almost ad nauseum yesterday. But if I have an asset that goes up and an asset that goes down, it's okay because it's on the same side of the equal sign. Dig it? Okay? Maybe, maybe not yet. We'll get there. So if it's going up here, it's going to go up here. If something's going down over here, it's got to go down over there. Same thing happens on either side of the equal sign. Or I can go up and down, just maybe in two different assets, like what did we do yesterday? When we pay cash for supplies, supplies goes up, cash goes down, but they're both assets. It's okay, it's on the same side of the equal sign. All right? Yesterday, when we left, we talked about revenue and expense accounts, or those are new classifications like asset, liability, owner's equity. Revenue, increase in owner's equity based on the operation of a business. So, an example would be received cash from sales. It's a new transaction. Received cash, favorite words, two favorite words. My asset cash is going up, right? Received cash, cash is going up. What's happening over here? I don't have a sales account. Not yet. We will. But since the definition is an increase in owner's equity resulting from the operation of a business, owner's equity is going up. Oh, I'm not going to write sales. I'm going to write revenue. Revenue is the category. Sales is the account. Like assets is the category, cash is the account. First chapter, they're just doing this, so that's cool. If I have an expense, paid cash for rent. Paid cash for rent. If I'm paying cash, I know an asset named cash is going down, but my owner's equity is also going down because expense definition, decrease in owner's equity resulting in the operation of a business. Okay? So we're going to try some of those. Our transactions will read similar to that, either paid cash, received cash. If you kind of have a clue to what's happening on one side, you'll figure out what's happening on the other, hopefully. Okay? We're going to just try these. We're going to try these together. I haven't talked about everything yet, but we will go there. I'm also going to make sure, oh, I've got another accounting concept. Pull your accounting concept little sheet out, if you will. Remember, we said yesterday our accounting concepts are sort of like assumptions. Things that we will live by, things that we assume are true, so that we have a basic understanding. All right? So the third accounting concept that you have. Third one, write this down, realization of revenue. Realization of revenue. So the concept realization of revenue means that I record this revenue transaction when my goods or services are received. Okay? So picture it. I go mow somebody's lawn. They're not home. So I don't get cash right now. However, I performed the service. So this transaction is recorded when the service is performed, or the customer's receiving this service of me mowing their lawn. So I will bill them, and they will pay me later. Okay? I don't wait until I get the money. This concept means we record it now when the service is performed, not later when I get the money. It's called realization of revenue. You had two others yesterday. Business entity. What does that mean? Business records, personal records are kept separate. So I buy a car for personal use. I don't record it. No one cares. Okay? The other one, unit of measurement. Always using dollars, or always using yen or pesos or whatever the heck you're using, but it's always the same. Okay? Because we start messing it up and it's just a boogled bunch of books. Gosh, that could be a tongue twister. Book a bunch of books in bookkeeping. We won't try to figure it out. Revenue. It's like our sales. And in our service business, we're performing services. So that's our sales. Even though we're not really selling anything, I guess we're selling our service. Cutting somebody's hair, it's a service. Okay? Fixing someone's car, whatever. All right? So that's your third accounting concept, and I think the last one in this chapter. So we're going to record some transactions. Will you go to page 17 in your book, and then in your workbook, whatever's next. Again, minus, oh, gee crap, but I don't have page numbers till about page 21. Oh, we're not. So what you're looking for is work together 1-3. So whatever that page is. So I'm reading in your book on page 17. I'm in the Arnie Green section. Some of these are going to, well, they're all going to be new because we haven't done this yet. Write the answers to the following column in your working papers. Here we go. Place a plus in the appropriate column if the account is increased, minus if it's decreased. Okay? Number 1, received cash from sales. Okay? Again, we said sales is revenue. So received cash, ding, ding, ding. What do I know for sure? Cash is going up, right? And cash is what type of an account? Asset. So put a little plus in the asset, or oh, I guess you have real titles. Good. It makes it a lot easier. So put a plus in cash, and then what else?
Your owner's equity.
Owner's equity. Because the definition of revenue or sales is an increase in owner's equity resulting from the operation of a business. Okay? So you should have a plus in cash and a plus in owner's equity. Good. Number 2, this is different. Sold services on account to Bowman Company. Bowman Company, what the heck? So here's the deal. If I am truly a lawn care place, I went to Bowman Company and I mowed their yard or whatever I do at Bowman Company. And again, I just do it. I don't go in and wait for my cash. Hey, whoa. They're a customer of mine and they pay when I bill them. Okay? they're what's called an accounts receivable. This is why you're going to be able to spell the word receivable by the time you are done. E-I, E-I, E-I. I before E, except after C. Oh, okay, here's a C, so I'm going to E-I. Yes, yes, yes. We will spell receivable right before we leave here. Accounts receivable. An accounts receivable means somebody who owes me money now. Okay? Somebody who owes me money. Why? Because I went over and mowed their lawn, but I didn't get paid right away. But according to my new concept, I've got to record it right away. I don't wait around until they're going to pay me. I'm recording it right now. So when I do this, I have a new account called Accounts Receivable Bowman Company.
Mm-hmm.
Okay? So AR. There's people who that's all they do is work in AR. They just get payments in or they bill people. Okay? Mitch?
What's the difference between accounts receivable and account or sale and account?
Well, that's the transaction. This is one account. Like cash is an account, supplies is an account, insurance is an account. This is an account. Sales on account is a transaction, and we're going to finish in a second here. So, accounts receivable, Bowman Company, they owe me money. In this transaction that I'm reading, number 2, sold services on account to Bowman Company. Instead of sold services for cash or received cash from sales, it's the same thing, only I didn't get any cash. This time, I'm putting it into an account called accounts receivable. It means someone owes me money. Okay? So it's an asset. It's an asset. Somebody who owes me money. What's an asset? Anything of value that is owned. Do I own Bowman Company? No. But I do own the money they owe me. So if I'm going to close my business down, I call them up and I say, yo, I'm going out of business. Please pay me now. So I have cash soon. Right? Okay? So accounts receivable, Bowman Company, is an asset. And when it says sold services on account, I'm replacing Bowman Company for my cash. So Bowman Company, accounts receivable dash Bowman Company is going up. My owner's equity is going up because I sold services to them. It's just like received cash from sales. Sales, our service is our sales. Clear as mud? As it goes, you'll be like, well, yeah, I get it. This is new. Number 3, paid cash for telephone bill. Paid cash. What do I know for sure?
Cash is going down.
Cash is going down. The big negative in cash. What else is affected? Something else has got to be affected.
Yeah.
No. This is a new thing. It's an expense. It's gone. I had it up here. Definition of expense. Decrease in owner's equity. Ding, ding, ding. Decrease in owner's equity resulting from the operation of a business. So, who is our owner? Susan Sanders Capital is going to go down then. Okay? Oh, no, I'm sorry, it's going up. Sold services, I forgot. But what the heck are we doing? We're paying an expense now.
We're paying a telephone.
Sorry. Cash is going down. Owner's equity is going down because it's an expense to the business. All right? Owner's equity goes down when we have expenses. Number 4, received cash, woohoo, on account from Bowman Company. Okay? Received cash on account from Bowman Company. Received cash, what do I know for sure? I know cash is going up. What's happening to Bowman Company? Anything? It's going down because they owe me less or nothing now, right? So they charged from me, and now they're paying it off. So I have the cash, and what they owe me is, it doesn't give us numbers, it's going down. Number 5, it's a new one. Paid cash to owner for personal use. Another new term. In accounting, when an owner takes out an asset for his or her personal use, it's called a withdrawal. And they'll have soon their own account called drawing, but right now we're lumping it in with the owner's equity. So if I take money out of the company for my personal use, wait, I thought you said we couldn't do anything about personal use. Well, they're taking money out of our company, and then we don't care what they do with it. So my cash is going down as far as the business, but so is the value of this guy or gal. Their ownership has gone down as well. So they own less. Their value in the company is less. What they do with the cash in their personal life, I don't care. Okay? So paid cash to owner for personal use means that we are giving them money out of the company, and guess what? It's theirs. They can do whatever they want. We just have to record it. So our cash account has gotten smaller, but so is the value of him or her in their company. So you'd have a negative in owner's equity, you would have a negative in cash. So let's take a look at this one. And as much as we did it together, that's what hopefully yours looks like. So, received cash, sales. Okay, sales is an increase in owner's equity. I performed sales or I did some service, but now they owe me money. It wasn't cash, they owe me money. This is what happens when an expense happens. The value of the company is smaller and our cash account is smaller. This one, they paid us on account. Cash goes up, what they owe me goes down. Lastly is a drawing or withdrawal. They took some money out of the business for their personal use. Okay? Questions about those things? Yesterday we really focused on the assets and liabilities. Today we've got revenue and expenses, which is kind of fast, but it is what it is. Questions about those? Please on your own then, for a few moments. On your own is purple right below. Honestly, it gets clearer when you have numbers, in my opinion.